host. I want to give all praises, honor, and glory to Yahweh, Bahasham, Yahweh Shai, Bahasham, Rachak, Kodash. Double honors to the elders and the apostles of Great Millstone, and peace and blessings to the elect. And this will be real quick. Okay, it's an article that I came across today, and been meaning to go into it. And now, through the Spirit, I have the chance. Okay, so as it says, this is from rtnews.com. This came out actually today. And as you can see, it says how the U.S. banking crisis could lead to the collapse of the Western financial system. And this is something that we've been constantly warning about, that the desire, okay, of those that are in higher positions, as they've been voicing openly, all right, even when you watch their Davos meetings, the World Government meetings, their World Economic Forum, the information they put out, the narrative and the agenda that they push, it's all about this financial system, this new digital financial system. Okay, and it's just about time to get rid of the old one. All right, so interestingly enough, when you look at how things transpire, um, usually you'll see one thing happen, and then you'll see another, and then another, and then another. And now the focal point is on, currently at least, the collapse of certain of these major banks. All right, which they're saying is the biggest collapse since 2008. So it says the growing number of institutional failures is a signal that the entire economic system is under pressure. Well, what do you expect? You know, it says the U.S. banking industry is reeling from a string of bank failures, which kicked off last week and continue to rattle both domestic and global markets. Economists spell doom and gloom despite efforts to stem the fallout. Here's what you need to know, which, when you look at it, right, the first off, this, I mean, in even in a normal situation, bank runs are still bad, and it's the last thing that any bank wants to have to deal with, because in most cases, it ends up very terribly because like we've gone over many times, when everybody tries to withdraw their money at the same time, they find out that the bank does not just hold your money and sit on it and wait for you to come and withdraw it. No, that what's the point? Then they'll just tell you hold your own money, right? But they have to make some sort of gain off of it. So, but the problem now is bank runs are even more deadly because that fear is contagious. And in essence, if it had continued, um, in that pattern, say SVB Bank, due to these individuals saying, hey, look, we're gonna pull out our money, and then spreading that, and other people, oh, we're gonna pull out our money. Everybody trying to pull out their money. This bank goes under. Now say that goes on and spread to another big bank, and then they do that, and then another big bank, and then guess what? Then the normal folk are gonna get spooked, and it's sort of like starting a stampede, right? With like, I don't know, a buffalo herd or something, and you spook one, it spooks another, and next thing you know, you have a stampede on your hands, which is a very critical situation, right? So it says here what happened, which, I mean, they could calm this thing down, and then act like nothing ever happened and wait a bit, or it could spiral into something bigger. But nevertheless, it will not change the agenda or the game plan, which is to do away with this old system and ultimately replace it with a new digital system, financial system, I might add, although it's going to spread pretty much everywhere. So it says what happened. California based crypto focused bank Silvergate was the first to announce impending liquidation last Wednesday. Then came tech and startup favorite Silicon Valley Bank, SVB, the implosion of which on Friday was the largest U.S. bank collapse since the financial crisis of 2008. New York based Signature Bank was the latest to be shut down over the weekend, as regulators feared for its liquidity. So they said, you know what, we'll just shut it down now, lest something like what happened with SVB happens here with Signature Bank, which would have been a big issue, right? So it says, why did the banks fail? The banks saw that their stocks plunge following massive deposit outflows. So inflow would be when people come in to put money in. Outflows would be when they want to take money out, right? It says amid fears of a recession, higher interest rates, and a slowdown of the market for initial public offerings. These factors made it harder for many businesses to raise additional cash and led companies to draw down their deposits as SVB or at SVB and similar lenders. See, so now all that money that was coming in via deposits is started slowing down. And then now they realize, hey, we are going to have a problem now when more people try to come for their money because we actually don't have it. So it says, what do interest rates have to do with it? In order to tame inflation, as they claim, governments in the West began to raise interest rates. There is a, which really, when you think about it, right? Say you're SVB and interest rates are low, but at that same time, you sort of should have known or seen those signs of inflation. And inflation is an indicator that interest rates will go up. That's just what they do to quote unquote kill inflation. So why would you go ahead and lock up your funds in different assets 10 years? I mean, it's like, you when you buy these long, you lock your assets in these long, you know, bonds and like things like that. I mean, common sense would tell you that, wait a minute, why would I do something like that if thinking interest rates are going to stay low, and here it is, there's inflation that's coming up. So what did you possibly expect to happen? Anyway, it says there's a historic correlation between higher interest rates and failures of over-leveraged financial institutions. Over-leveraging occurs when a business has borrowed too much money and is unable to pay interest or principal repayments or maintain payments for its operating expenses. Interest rates in the US have been hiked on more than one occasion over the past year, and many analysts warn they are currently too high at 4.5% to 4.75% to keep financial bubbles from bursting. But then there's also the problem on the other hand, right? Which they say, okay, well, say they stop increasing interest rates, right? They stop hiking them up. Then they're gonna say, well, now inflation is gonna drive up, turn into hyperinflation, and then we got to deal with that. So which one is it gonna be? Who's next? It says the stock meltdown resumed with a vengeance on Monday, with several bank stocks halted due to volatility. As of midday, PacWest Bancorp, Zions Bank Corporation, First Republic Bank, and Regions Financial were no longer trading until further notice. How did the Fed react? The Federal Reserve, U.S. Treasury, and Federal Deposit Insurance Corporation, or FDIC, on Sunday announced a new emergency program aimed to shore up confidence in the banking system and protect depositors of failing banks. Now, keep in mind, right, if you read in history, whenever they had these kinds of situations where there was like a scare or, in the public opinion or the public trust in the banking industry or something like that was failing, they will not come out and tell you, oh, well, in actuality, we do have a problem. No. Okay, they won't come out and tell you that. It's called damage control. They will come out and they will make it seem as though, oh, we're doing everything we can. Don't worry, everybody's gonna get their money. That's not gonna fix it. All right, that's not gonna fix it. And in fact, they don't want to fix it. If they wanted to fix it, they would have done that. They would have stopped it from happening in the first place. A lot of these moves that they made, these poor decisions that they made, they would have not done that. Okay, so it says here, they allow where we at? Yeah, they will allow both insured and uninsured depositors of the collapsed banks full access to their money through a special FDIC fund. The Fed is also separately. The Fed also separately announced it would make additional funding available for banks in case of emergency through a new bank term funding program. So now, what happens if another three or four, five or six banks go down, and now it's just a whole fear trend? Will the FDIC be able to cover all of them? Hmm. So it says, will the measurements or the measures stem the fallout of the collapse? Traders and analysts claim the panic is already ripe and could further push investors to move funds from small banks to what they view as the safety of large systemic important lenders. This would drain liquidity from the latter, which are it says, and make and may lead to their downfall, right? So here's the thing, though, right? You have this mindset that, okay, well, if there's a chance that these banks, these small banks, won't do too well, I want safety and security. I'll move my funds into a more secure bank, one that is, I know it's basically too big to fail, too large to fail. It says, is there a risk of a broader upheaval? Governments in the US, Britain, and Canada have been taking extraordinary steps to prevent a potential banking crisis. Governments finance watchdog stated governments. Germany's finance watchdog stated the distress situation of SVB's German branch does not pose a threat to financial stability. According to some analysts, there is no risk of contagion since the authorities have stepped in. Well, let's see what happens, right? So, what's the worst case scenario? Depositors could panic, resulting in national runs on banks. Now, if that happens, shit, pretty much anarchy in the streets at that point. It says, since lenders don't have the money, they will be forced to close their doors and block depositors' access to their accounts. As governments cannot protect all depositors, we could be facing a 1923 style Great Depression, or worse, the collapse of the entire Western financial system. So, could we see that? We could. Could we? But could it also not happen? Well, we got to watch and see, right? Because right now we're witnessing, how the Lord is working by controlling these devils into pushing this controlled crash or this controlled systematic collapse. And if you look at everything over the past few years, they have systemically or systematically collapsed and destroyed a lot of things, infrastructure, food securities, a whole bunch of things that they've derailed and put in a bad position, if it wasn't already. Okay, so they're setting up a very painful time to come, and people's money, because people are already complaining about certain accounts that they have, weird transactions are showing up. They're not getting access to their money. They're losing funds from their bank accounts. So we got to watch and see. But as the scripture say, which I'll quote it, not to be ignorant of any matter in the small or in the great. And as Yahushua said, we have to watch as well as pray. So let's see, what's gonna come out of this, what's gonna happen next. Like we always say, the one thing that we can bank on is prophecy, in the sense that regardless of what they do today or tomorrow, we still know what they're gonna end up doing, whether it's a month from now or a week from now or 2 months from now. We know what the end goal is. So regardless of what games they try to play on their way there, we know where they're gonna end up anyway. Anyway, with that, Lord willing, this was edifying to the elect. In closing, I want to give all praises, honor, and glory to Yahweh, Bahasham, Yahushai, Bahasham, Racha, Kodash. And until next time, Shalom.